Greetings everybody, Sive Morten is here with the ForexPeaceArmy.com. Let's take a look again on the Forex market. As usual, we have prepared the weekly report, fundamental report on the Forex market. I will put the link down below in the description to this video, as usual. So, towards speaking about the fundamental background, I don't know whether you have signed it or not, but it seems, at least to me, it becoming more evident that markets are turning from some particular numbers of some important data, such as CPI, payrolls, whatever, to watching over global situation, how the big processes are going on and what's really going on with the dollar, with the other currencies, what stands particularly in the background of the big driving factors such as the deficit, interest rates, and so on. So investors are turning attention from some particular moments to general moments. It's more and more articles in the mass media appeared concerning the dollar status, foreign reserves of the central banks. Investors are worried about the recent situation with the debt and rising of the yields across the board. So all the stuff actually are very important. And in this report, we have taken a look at some moments that, by our view, are becoming maybe not vital, but close to vital. For instance, have you thought about what will happen if Fed is cutting rate with inflation stands around 3% in all markets stands on all-time highs and long-term yield is rising? So what particular result might be? Or, for example, just simple combination. Markets currently expecting the rate cut from the Fed until the end of the year. So it should be 3 rate cuts approximately for 70 basis points. What will happen if, as also expected by the markets, Bank of Japan will rise rate in December? What will happen with the carry trade, what the real yield of a carry trade will be, and what will happen if this carry trade will start collapsing? So that's particular moments that were interesting with it. And we have taken a look at these moments in our report, and it leads to really interesting conclusions that we have made. Finally, of course, we have taken a look also at the European Central Bank meeting, have provided you the opinions of the big banks such as Goldman Sachs, JP Morgan, Morgan Stanley, Deutsche Bank, concerning what they think about the interest rate in Europe, whether it will be changed, whether it will be changed at all in this year, and how it could make, what impact it might be on euro currency in relation to the United States dollar. So if you're interested, you could read it. Speaking about technical picture, here we do not have lots of new things because mostly we have specified our trading plan on Thursday, Friday. On the long term, it would be better to show you the dollar index chart. That's actually perfectly shows our view. We have uncompleted yet ABCD pattern with a 95 target, and right at the bottom of this pattern, the 3 drive buy is forming. So it means that we're waiting for a last downside leg before possible reaction will start. It doesn't mean that it will be a sharp reversal and in general start growing of the dollar, but it means just it should be some reaction on this target, just because this target relatively strong. You can see this ABCD on the big scale. It's also weekly 3 drive, so obviously there should be some pullback here. You could also see the same pattern on the euro currency, but on the euro it looks not as accurate as on dollar index. That's why I'm showing you on the dollar index. For example, on the euro currency, if you take a look at the weekly chart, you could see that we could apply the same extension. And if we speak about 95 on the dollar index, here it might be somewhere between 119.20, 119.50. I would use this range for the targets. Here you could see 1886, but we also have ABCD on a monthly chart, which stands around 1915, 1920. That's why I'm speaking about 1920, 1950. That's approximately the target that might be achieved in the nearest time on the euro currency. On the daily chart, actually we've got answers on the questions on Friday, where after the CPI report, actually we've got this bullish grabber. And on Friday morning, we said wait for some minor pullback to predefined fib levels, taking the long position, and stand aimed on the nearest target 790. But we hope that this grabber will become the starting point for a bigger action. So it will not be limited with just minimum target that stands right here. And you can see plan in general works really great. So this retracement I will show you in the hourly chart. We've got precisely 50%, 30%, 50%. It's just 10 pips difference actually. Retracement and market also shows upward action. So if you have taken position with this analysis, that's great. You could move stops to the break-even and just see what will happen on the beginning of the next week. If you have missed this, well, on Monday probably you could get another chance, because as you can see, market hasn't gone too far from the levels that we have specified. And if you take a look at the 4-time frame chart, you will see that right at these lows, that's what has been formed at our entry, we've got another minor grabbers on the 4-time frame chart. These grabbers suggest upward action taken out of this top at least, so it also suggests upward continuation. And now you can see the market shows minor retracement after these grabbers. So maybe on Monday you also could get another chance for position taken. It's also great that, take a look, our entry where we have suggested it been confirmed by the grabbers on the 4-time frame chart. So just bring some more confidence for position taken. That's probably all that we could say currently in the euro currency. We have bullish view, we have taken long position, upward action as we supposed it started, if nothing actually curious will happen next week. But based on the technical picture, market should trying to keep going higher, at least based on all time frames on the patterns that we have. This is most common suggestion that we could make here. So that's probably all for now. I'll see you on Tuesday.